That is right, ladies and gentlemen. NVidia. We're talking about NVidia today. Why? Well, they reported earnings, and let's just say the after hours. They're looking pretty rough for this company, right? Down really right around 7%, just below it. But after a pretty nice day in the normal trading session, up 5%, right? Very good day for them in the normal trading session. But then this after hours move because of earnings, pretty rough. And we look at the stock year to date, already down 43%. Already down 43% prior to this move. But given really such great prowess from May all the way until last November of 100+%, this thing is technically still up over the last year. Now, given this after hours move, it's only up around $1, but all things considered, when you look at many other companies over the last year, they can't necessarily say the same thing. So that's one thing NVIDIA has going for it. But we'll take a look at these earnings and see what we can find. So if you recall, look, I predicted all things going well for NVIDIA. I had no doubt we'd see great demand. We'd see great numbers from NVIDIA. And I'll just tell you, looking at these numbers, I'm not disappointed in the earnings themselves. Very good, all things considered. Non-GAAP EPS of $1.36 beats by 7 cents. Okay, top line or bottom line is beating. I like that. And then from a revenue perspective, this is a beautiful number. $8.28 billion, up 46% year over year, beats by $190 million. Not a shocker. I mean, let's be clear to each other. I told you they'd beat, right? I told you they'd beat on this revenue line. I told you they would. Just felt good about it. Record quarterly revenue for data center and gaming. Now, I think there comes a lot of concern when you look at NVIDIA when it comes to the gaming sector, seeing as it's one that's absolutely getting hammered right now. Not really in the fact that it's looking bad over 2019 numbers, but you're comparing it to 2 years of incredible growth, and now it's slowing down naturally. I mean, we're talking about some negative numbers here, which is okay. It's okay to happen after, you're still way up over the 2019 numbers, but it didn't really happen for NVIDIA that way. We're still seeing decent demand in overall hardware units. Consoles still selling well and still not necessarily all that many out on the market, But what is great here, obviously this was pre-mentioned or pre-announced already, but the board of directors increased and extended the share repurchase program to an additional $15 billion through December of 2023. So when they see fit, we'll see, but they extended it and added $15 billion more. That is a good sign. Let me just tell you that. When companies are announcing they're extending and expanding the stock repurchase program, let me just tell you, you should be happy first off, because obviously less shares outstanding is better for each shareholder. I mean, you're owning more of the company. But it also shows you that even the people in charge think the stock is at a value where, they believe it's at good value. So it's good to see when they do that. It really is. Now, outlook, this is where we see a little bit of a dilemma, okay? Second quarter, they're expecting a revenue line of only $8.1 billion. That's compared to an 8.4 consensus. Now that is where we see a big issue. But this is because, as they mentioned there, they're estimating $500 million loss of revenue due to Russia, of course. Blame everything on Russia. And this one is actually fair. COVID lockdowns in China, because China is still locking you down, and they will shoot and kill you if you leave your house. Not incorrect, folks. Not incorrect. They will do that to you, or they'll put you in an internment camp. That's mostly Australia, but yeah. So this makes sense. Obviously, the numbers would look pretty good, but there's a lot of macroeconomic issues and really just world issues going on right now that are unfortunately impacting a lot of companies, sadly. But I'm not really fazed by it. GAAP and non-GAAP gross margins are expected to be 65.1 and 67.1 respectively, plus or minus 50 basis points, or 0.5%, nothing crazy. Operating expenses, from a GAAP perspective, 2.46 billion expected. Not too bad. And tax rates expected to be 12.5% plus or minus 1, excluding any discrete items. So I look at those numbers, and obviously it's the guidance that's the issue for these for shareholders right now. That's why you see them selling out. But we want to take a look at the press release because we can see some dialogue that goes along with it. Coming from, obviously, CEO, we'd like to see a little bit of news. Obviously, they're going to sell you the company, but, that's their job, is to sell you it. But let's take a look at what we have here. So the GAAP earnings actually were down 16% from a year ago and down 46% from the previous quarter. This includes an after-tax impact of 52 cents related to the acquisition of ARM. So all things considered, well, the termination, unfortunately, because why not? That's just U.S. government for you. But they had to pay $1.3 billion for a company they didn't even get to acquire. That equated to 52 cents on an EPS standpoint. So when you take that into consideration, again, this is a company that actually grew profitability quite a bit year over year. Just this one charge, unfortunately, hurt them. But you can see it in their non-GAAP line because that's excluding this number. Non-GAAP EPS was up 49% from a year ago and up 30% from the previous quarter. So if you exclude that ARM acquisition termination charge, you can see where this company's going in terms of an EPS line. 49% growth. It's beautiful. It really is a beautiful line. This company's doing really good numbers there. Growing revenue 46%, growing earnings by the same amount percentage-wise. I like to see it. Here's from Jensen Huang. Obviously talks about delivery of data center and gaming against the backdrop of a challenging macro environment, as I mentioned. So good things. Data centers have become the largest platform. Good as well. They're gearing up for the largest wave of new products in the history, with the new GPU, CPU, DPU, and robotics processors ramping up in the second half. New chips and systems will greatly advance AI graphics, Omniverse, and self-driving cars and robotics, as well as many technologies impact. Very exciting to see. Obviously, if you're a shareholder of NVidia, you like new products coming to market, and they've not just got a couple new products coming to market. They've got a whole lot, folks. A whole lot. It's a whole lot. During the first quarter alone, NVIDIA repurchased $2.1 billion of shares, or returned $2.1 billion to shareholders in share repurchases and cash dividends. Obviously, most of that is going to be in repurchases because the company only pays 4 cents a share or 4 cents a share in dividends. So not really crazy. And again, they announced that as well. They announced another 4-cent dividend. Nothing crazy there. What do we like to see here? Net income line, again, we mentioned a down number here, but I'm not too scared about that because you look at the non-GAAP perspective and you see up numbers in the net income line. Up numbers. The GAAP one is down, but it's because of the one-time charge, as I mentioned. Outlook, we didn't like it, but this is where we get excited. Data center. We're talking about highlights for the data center. Data center revenue was up 83% from a year ago. 83%, folks. We're talking near triple-digit growth. That's beautiful. This is a fantastic segment for NVIDIA. They continue to do great things. Other than that, obviously, they will talk about the chips and GPUs that they will be, discussing here and developing. Very exciting. Major updates to NVIDIA AI. Yeah, enterprise-ready software for advancing speech, recommender systems, hyperscale interference, and more. So there's great things. There's great things coming when you look at a data center standpoint. Very nice. And then this is an interesting one. But they did announce a collaboration with Kroger, that's right, to reimagine the shopping experience using AI-enabled applications and services. I'm curious what that looks like, but They're getting a little bit into retail. They're getting everywhere. Obviously, they collaborated with Microsoft as well. This company's getting everywhere. We love to see it. From the gaming segment, gaming was still up 31%, $3.62 billion, 31%, and up 6% from the previous quarter. That's nice. The fastest ever consumer GPU here, the GeForce RTX 3090 Ti, fastest ever. That's right. And 15 new games that are optimized for the NVIDIA RTX, which obviously, if you didn't know, it's just beautifully graphics-wise. Beautiful. Include Dying Light 2, Ghostwire Tokyo, never heard of that. Shadow Warrior 3, never heard of it. 250 games and applications now optimized for NVIDIA RTX. They want people to get these chips, folks, not just in your computer, but obviously in gaming systems as well. Yeah, that's very nice. And they launched, that's right, Fortnite on GeForce Now, streaming through the Safari web browser. Does it matter? I don't know who's playing Fork Knife on mobile, but if you were interested. But professional visualization, obviously pretty small segment for them, but it was up 67%, $622 million. I hate to say small segment because obviously my whole family would retire for generations upon generations upon generations and never have to worry about money if I had $622 million. Now, if I just gotten drafted in the NFL previously, a month ago, or about a month ago, I should say, I kind of deserved to be drafted, but I never got a call. So could be undrafted free agent potentially. I'm waiting on a call, but I could have that money eventually. Good to see that segment up as well. Then what I really like too, again, I talk about this one quite a bit from the automotive and robotics segment. You saw a 10% decline, okay? 10% decline year over year, $138 million. Not exciting, but I do think this is a segment that in the future will be worth a lot more than it is right now. They've started the production of the NVIDIA Drive Orin autonomous vehicle computer, which has been chosen by over 35 automakers, truck makers, and robo-taxis. Again, this is where you get excited. Companies that choose to use this NVIDIA Drive Orin, obviously, this is a lot of money for them. A lot of money, yeah. They announced wins with Lucid Motors and BYD. Lucid Motors, obviously, don't know if I believe the company really is real, but with its automotive design win pipeline to over $11 billion over the next 6 years. There's a lot of money to be had in this segment, and I really think they'll flesh this one out. But we'll have to look 5 years down the road, and I really like this segment. I'm just going to tell you that one right now, folks. Yeah, let's look at the balance sheet, and let's call this stinker a day, okay? Current assets right now, only a 3 months comparison, just the last quarter over quarter, $29.5 billion right now compared to $28.8. Slight decrease in the cash position, but increase in the accounts receivable as well as inventories. Nothing crazy to say about from that standpoint. And from a total asset standpoint, not really much either. 45.2 compared to 44.1. Not massive change really anywhere here. Nothing crazy from an asset standpoint over the last 3 months. Obviously, raising it by $1 billion is nice. Now, from a liability standpoint, 5.5 currently, sitting against a $4.3 billion line. Not a lot of short-term liabilities on this company. Obviously, the current assets outweigh it by quite a bit. And the total liabilities in general, yeah, that's right. They are outweighed quite a bit as well. 18.8 compared to 17.5. Now, they did increase the liabilities more than they increased the overall assets. But long-term liabilities did not raise at all. It was some on the other long-term liabilities, but mostly in the short-term standpoint from accrued and other current liabilities. So shareholder equity sitting at 26.3 compared to 26.6. Shrinkage of around $300 million over the last 3 months is not anything to really write home about. It's nothing crazy. What do I think about NVIDIA? Look, this is a stock trading pretty darn expensive compared to the total market. I can't lie to you. I'll be 100% clear with you. It's trading expensive. We're talking about a price to sales on this company. Let me do the quick maths real quick. quick maths, somewhere over, oh gosh, it's still around 15, I'm pretty sure. It's pretty pricey in a PE ratio. At 44, potentially higher because of this darn ARM acquisition charge. But the company is right now just barely away from its 52-week low, as I mentioned, because it's still positive on the year. But it's close to its 52-week low, which obviously happened literally a full year ago. So, well, actually, no, it actually recently happened. What am I talking about? I think the 52-week low, yeah, they hit the 52-week low. Maybe? I thought they hit it earlier in May, but maybe I'm mistaken. But the stock's still up massively over the last 5 years. Look, this run-up that we saw in 2020 to really the start of 2022 was unbelievable. 400% in the span of 2 years. That was incredible. Now we're seeing a little bit of a reality check. Unfortunately, it's not great, right? The stock's still a little bit overpriced compared to the general market, but the company's doing a lot to warrant a better price, in my opinion. I think it warrants a premium compared to other companies because of how well they're run and how successful the business has been. Whoa. Okay, I don't know what's happening in my ears, but whoa. I feel like my brain's about to explode. I could not fathom a time in which you look at NVidia 5 years from now and you're not upset that you didn't buy. Again, this company was at 346 not too long ago. I can't fathom a time in which I wouldn't buy this company and be happy 5 years down the road. Now, is this screaming buy? Right now, it's not a screaming buy. No. I'm just telling you, if you did buy it, 5 years from now, you'll be very happy if you're a long-term investor. I think there's still plenty of room to go down, but I'm still fine with holding on to NVIDIA right now and potentially buying a little bit more, folks. That's what I got for you today. Hope you have a great freaking day.